Hello guys. So today I want to teach you something. It's been a while since I posted my new videos, and I'm going to be very fast as possible because of time. So I want you to learn something. Yeah, I want to teach you a pattern that once you master it, and this pattern, there's a zone whereby when the market enters that zone, it respects strategy, and you realize that most of us traders, whenever you're trading, it comes a time whereby you make money for like 3 consecutive days, then the fourth day and the fifth, and maybe you start entering the losses. And again, the next week, we repeat the same pattern. So there's this pattern that you just need to master here, right? You need to understand the face of the market, because the moment you understand the face of the market, this makes helps you to understand the advantage of using your strategy in which phase you are in. For example, you realize that most of the time, market it enters a zone where it's not moving up and down. So you realize that in that zone, everybody's trapped there. All the strategies, they seems to be present in that zone, right? So once you enter this zone is called a kind of a range whereby the market's not moving up or down. So you realize that when you are there, everybody is looking forward to make money from this zone. Okay, sellers, they're up there with their strategy, support a resistant zone. They're looking forward to short the market. Then the buyers, they're down there looking at the strategy at the zone, and they want to do what? They want to shoot their you know their they want to shoot their positions into the upside. They want to go long, but realize that this is the zone. I call it the negotiation zone, whereby now the market accumulates everybody, all the positions in that place. You end up seeing your setup, giving you all the confirmation you want, but this one is called a losing phase, because right here the market respects no strategy. Now, what you're supposed to do here is to identify the center of this box, right? This contraction, sort of a contraction, a range. Once you identify that zone, draw your line in the middle of that zone. All right, I want you guys to go and try this on your charts. Go check on those levels you've been losing. This one level, we call it the fair price value. All right, we know that whenever the sender, even if you got the market and the price of any product you want to buy, it's at 50-50. Everybody's benefiting, the seller and the buyer. All of you have one agreement. Nobody's benefiting more from the other one. You realize that the market also has something like that. So let's say that this market leaves this zone, because at the end of the day, it has to leave the zone. Let's say that this market leaves the zone with the upper side. Who's making money, right? The buyer is making money and the seller is in pain. The seller has been taken out. You are no longer holding your position because you're trying to go short. Then the market went long, so you're out. But remember, when the market leaves this zone, it creates what we call a manipulation, because what retailers see, like retailers are just people like us, like we run small accounts. So you find that this market, once it leaves the zone, we see the trend, and we start accumulating our positions into that move because we were told to work with the trend. And that's true, I agree with that. Work with the trend. But I want you to understand one thing: be logical enough. Don't just work with your strategy, have other confirmations. Understand that even in real life, that whenever a price of a product, keep increasing, buyers will reduce, and the chances of the people having that product, they are likely to go to the market and sell that product than to buy a new one, because the price is expensive. Now, the importance of this fair value price line, it helps you to understand, the more price gets away from this line, the more it becomes expensive. And if you are buying, the question is, who's selling to you, right? Now, let's say that you are making money from this zone, and who's still holding the position? We know that the buyers are still holding the position, but the sellers are out. So this means that anybody who's in position in profit, you know that when you're in profit, you are happy, and we hold our position to make more. But remember, the more you hold your profit, the more you move away from the fair value price, all right? the more you account, that profit will turn into losses, because the more market gets away from the fair value price, the chances of sellers coming in, coming in. So when they come in, they take all the money that you have made, and even they go below this to make sure that all, whenever you are holding any buy position, you are out. What does it mean? It simply means that you need to understand in the phase you're trading, the more the market moves away from the fair value price, the risk it becomes, because retailers are chasing the trend. And when you're up there, the market will do the opposite and sell. You look for a buy, the market will start selling. When you're below the fair value price, the secret is stop accumulating your sell positions, because the more you sell, you chase the trend, that is the moment the market will start taking your positions, all right? Starting taking it back, because the more something is cheap, the more something's cheap, the more people are likely to buy more. This means the more the price is below the fair value price, everybody wants to buy, all right? That share, everybody wants it. We want to get things at discount. At the premium, everybody wants to sell what they have because they want to make profit. You only sell when something is expensive. The market, what will happen when it has taken out everybody, it will come back, right? Come back to the center. This is where everything is done. If you see the market coming back here, or it hangs around this zone, around this fair value price, and everybody is out, expect that market now to trend, to give a clear trend, all right? Either it will go down, okay, or sometime if it hangs around this high, it will go to this side. And this now, remember, when you see the trend, the moment you start chasing the trend, now the big boss, they start getting out. They get out using your liquidity, your stop loss. That's when they get out, when you're opening your positions. They get out. The more the price is below the fair value price, down here. We are down here. You chasing the trend because you can see the trend. Then these guys, they start buying your positions. When they come here, right, this was when the market decided to go up or down. When it started going up, these guys, they know that the price is above the fair value price, and they start getting out. They start getting out. Then for you, you are now you start seeing the trend, and you start jumping in. So the more you go in, they get out. The more you go in, they get out, until all of them, they are out, and they enter another, like a new phase, because they have to keep creating these phases for the market to move, right? They enter a new phase. This phase is called a losing phase. I call it a losing phase. I don't know the best name to fit this one, but it's called a losing phase. This means that, again, when the market enters this zone, you need to be very, very careful. It will respect no strategy. The moment you see the market leaving the zone on the lower side, understand this is a manipulation, and this is what we call the trend continuation. The market gets out on this low, make everybody to see like, okay, this one is the accumulation, this one is distribution, so we going to go down. Then the market, remember, when you get out, remember the center of this box is the fair value price. The more price go down, sellers make money, buyers are out. The market again will have to go up, collect all the stop loss, and come back to the center and decide whether to go up or down. So how do you look for a good quality trade? This means that before you start analyzing the market with your strategy, before you start checking where the market is going, understand the flow of the market. Understand where the money is flowing to. Is the money flowing to the downside? Is the money flowing to the upside? You need to understand, because by only understanding where the money is flowing, that's when you can be able to make money. But if you are not, then you check your trades. You'll find that Monday, Tuesday in profit, Wednesday you lose, Thursday, Friday maybe in profit. Coming the next week, you start by losing on Monday, Tuesday, because this phase is always there. The strategy, you don't have to jump from one strategy to another. Every strategy work. You only need to back test and check your strategy very well and understand in which phase does your strategies work. Is it in a trending move? Mostly on trending move, that's where we make money. But once you understand, like, you're out of the zone in manipulation, even if you hold your profits, you will save your account, because anytime you see the market misbehave, you get out and you start looking for your way to go back in the zone. So let's do this just very fast here. I want to save on time. The next video, I think I'll explain more. So I like using the daily time frame, because the daily will always show you where money is flowing to. Now, this gold, on this gold pair, You can see it used to trend sometimes back, then it stopped. Now, what is the question here? The easiest way, as I said, always find that box. Try to find that contraction, the zone whereby the market is kind of not moving well. So I'll be very fast. I don't want this video to take time. So let me just use the most reasonable zone that is very easiest to access here. But I'll make one video again of this and how to get your entries here. If you look at this one right here, I think that this one, the market is not moving. This is what we call a contraction, a range, a small range whereby the market is not going up or down. So the only way to get out of, whenever you understand that the market has entered that zone, you need to be very careful. On the lower time frame, you can find positions, it's okay. But again, once the market enters this zone, it respects no strategy, because this is where manipulation is done. And manipulation is not what you think. It's just the opposite of mostly what you think, because when you're buying, when the market's going up and you want to buy, then it sell. Now, with the simple explanation to save on time, I don't want to take more than 15 minutes in this. Okay, so here, let me just like locking this one. Now, we're out here. Now you see this is the box. You need to identify number 1 and number 2. Number 1 is the accumulation phase. Not accumulation phase. Yeah, the manipulation phase. This is number 1. Market lifts this one. We know that everybody's looking at this as a push to the upside. A push to the upside. But on the same, because even previously, this was another zone. The market was not moving here. And if the market is not moving, just before this, let me clear on this one. The market was not moving on this phase. This means that anybody who's trading here, said you're making losses, or you're winning, and the next day you're making the loss. So what I want you to learn from this, and I'm not saying that you follow what I say. Take your time, go to the charts and do your back testing. Go there and check. All right? You can see this phase, market got out from this side. And everybody, on the low time frame, this is a big move. Everybody's looking for it to go short. But the market wants to get away, and this is the fair value price line. Once the market gets away from it, everybody starts jumping in it, jump in, and those who are looking forward here to sell, they accumulate their positions. But the market reaching this zone, it just gives you what you call manipulation 1, right? Then market will go again opposite, because these sellers have to give back. It will go up and it give here, you got number 2. This is a manipulation 2, right here, number 2. Once you get number 2, the market, as I've told you, it must come back to the fair value price. That's where the decision is made. That's where they decide where the trend will go at the end of the day, after accumulating all your positions there. Now, you can see the way the market leaves the box, and this one is there, okay? Leave the box, you start selling, then they start buying. You start buying, they come back to the, you see, to the fair value price. What does it say? What I mean is this. The simplest way to understand this, leave alone the leaving and the coming back. Understand this. Identify the fair value price, right? Then look where the market is. If the market is below the fair value price, the market gets away, right? The chances of the market coming back, because the more you want to sell, the product is more cheaper and you're below the fair value price, this market, they'll push it back. And when they push it back, they push it with a good move. You see, when the market is above the fair value price, you're looking for it to buy. These guys, they take it back. Then you can see once it come here, they want to make a decision where the market will go. So the market will start hanging around this fair value price for some time, because it goes up, comes back, goes up, and it enters a new phase again. If you look at this, this is a new phase. I call it a new losing phase. So again, once you notice this phase, stay away, because these guys, they want to create a trend. The market's about to trend, but they need liquidity. So you need to understand the phase there, and you identify, once you identify the contraction, the market start creating a range there, you stay away, you know what is coming. You see, they break up and they behave as if they want to go to the upside. And on the same, they break on the downside here. They give you number 2 again, number 2. But you can see number 2 is being supported by what? The first contraction, fair value price. From there, everybody is out. Sellers and buyers are out. Then these guys, they start creating a very smooth push to the upside. Now, this daily time frame, gold has been here for almost a month. I don't know, it's a month or something. It's been here for some times. And you can see on daily, this pair ended a losing face. If you have been very careful in the last few days, gold has not been giving a clear structure. Now, what is here? This is a losing face. This is the first zone. Gold entered this face. And what is the 50% of this face here? We need to measure the 50% of that, right? Once you get that, then it means that this where you have your fair value price. Fair value price. This where the most difficult decision is made. Now, the market, you can see it left the zone on the lower side. What does that mean? It means the manipulation, because look at how we look at the market as most of us retailers. We look at the market the way it leaves the zone, right? Because we are like, okay, this gold has been trending for too long. It needs to calm down. That's how we think, all right? Our strategy will tell us so many things, the indicators and everything. But I'm telling you, once the market enters this zone, you can only make money in a lower time frame. On high time frame, you cannot. Any time frame more than 1 hour, you cannot. You cannot. Anybody who has been making money in gold in the last 2 weeks using a high time frame, 1 hour or something, drop your comment. The market, once it enters this zone, is a losing phase. And you can see it leaves the zone on the lower side. We call this one a manipulation. And remember, what's the fair value price? The fair value price is here. And I've said, the more the market gets away from the fair value price, the more the chances of the market, it's because everybody's looking to sell, the chance of the market trying to come back. And remember, it's not just coming back, it's going up until all these people holding their position up here, they're out. This is the last liquidity line here. Take them out and it needs to come back again. Where? To the fair value price, and it will hang around here for some time, and maybe to go to the upside, or now it can come to the downside. It will depend where the market will go at the end of the day. It's a matter of probability. We cannot predict where the market will go, but you can have a probability of what to expect. So here we expect the market either to go up or down. But just before that, we cannot still anticipate where it will go, but you can see we have phase one. Remember the manipulation leg. We are here in a manipulation move. What does it mean? We are below the fair value price. The only thing to survive is to look for a buy position. If you're going to look for a short position, okay, you can make money here and there in the lower time frame, 15 minutes or something, 15, 30 minutes, mostly 15 and 5 minutes, it's possible. But where's the flow? The money is now flowing where? The other side, where? Because look, where's the last liquidity line? The last liquidity line is here. Here, and the next one is here. This is where this market is going to flow. And if you want to understand that the market is tired, yeah, it want to change direction, you can look at the behavior of the candles. They get tired, they start creating what we call the rejection. Then you can go to the lower time frame and find your way back, because you have to align yourself with the flow of money in the market. So how do you do this? You go on the lower time frame, all right? In your lower time frame, identify that time frame, identify that contraction, because this one is always there. 1 minute, 5 minutes, everywhere. Identify, because you want to go back. If the market leaves the zone, okay, let's do that. You identify first the fair value price there, and you identify the line here. Once you identify that line, you identify your fair value price line there, and let's get out of this one. And you want to see how the market leaves the zone. What do you want to? You want to go to align yourself with the high time frame. You wait for the market to go below the fair value price, then you can buy. If you buy, you're in safe hands. The market will try to rest here, and it can go to the upside because it has to align with the fair value price. But the moment the market leaves the zone on this side, know that you have been played. This is a manipulation zone. You rather stop looking for a buy and wait to go short until you are below the fair value price. Then you can go up and align yourself with the high time frame. Now, let's drop on where? Let's drop on something like 1 hour time frame or the 4 hours. We identify this box here because we want to go back, because this is where the market is going. This is where the money is flowing. We're supposed to go back. So let's check the 4 hours time frame. We see we have that rotation there. Now, on the 4 hours time frame, we can see the structure is not clear. What do you do here? On 4 hours, you can see the last rotation when the market left the zone. This one is a zone. This the box. This is the last move the market left the zone, and it gave you this. Are you seeing this? This face. This is the first phase you can see. Right here, the market is not clearly, it's not giving a clear picture. So you can do what? You can use this first. This was the first zone to use to see the picture of the market, and you could draw your first fair value price line here, right here. That one just to give you a clue where the market wanna go. Remember, market has left from the upper side. What does it mean? This was just to support a sell of the manipulation to keep pushing down. So there's no way you could look for a buy. You can only look for a buy position when you're below the fair value price, and you can try to go back. But the first time frame maybe cannot give you more confirmation on where the market wanna go. And that's why we say that if you analyze with the daily time frame, using the 1 hour time frame is the best. Now, let's use the 1 hour time frame and see clearly where's this box on 1 hour time frame. When you come here, you can see the box is still clear. Yeah, still just clear. As you can see, the box is still clear. So this means that if the market left on this side was just to show a continuation to the downside, which gets you away from the fair value price. And this one, you could have some short sales. You see, the moment the market leaves the zone, everybody starts jumping to it. They want to buy. Then what happens? The market sell to the downside. Now, since the market is here and everybody's watching the trend, and so we're all marking our indicators. I'm sure there's some people who use even the what we call them, the EMS, and the EMS that are here. You can see they're trying to play around with there. You're trying to look at them as the sign of confirmation, but the market is just moving differently. So this, you see, the market gets out, you try to buy, and it goes to the downside. So let me close this indicator. Okay. It moved to the downside. Now the market is here. Look where the market is here. The market is below fair value price, and this is just the 1 hour. In the process, you can see the last process, where is it? The last box is here. And this happened during the news. I don't know, it was CPR or something, the NFP. And you can see what happened. Everybody was here because market got the support from the previous fair value price, and it was trying to go down. But that was a trap. We say that when you are below the fair value price, only look for a buy. Don't sell. This means that when something is cheap, you can buy more. And when it's expensive, in fact, when you have that product, you can sell than buying a new one. Now, this one, the market is below the fair value price. And what happens? Market went up, took out everybody. This is the first leg, number 1, right? And this is number 2, right? Number 2. Now that everybody is out, where's the fair value price of this market? Where's the fair value price? The fair value price, we can have our line where? And have our line, something around this zone. Okay. When you have this, where's this contraction? This contraction, actually, this box is up to here. No, yeah, just here, around this zone. Because I have to get accurate measures around here. This is where the market was really in a contraction, not getting out. So you can have your fair value price, that line there, and you can mark it as your line of money flow, and you look at how the market leaves the zone. Right here, people have been making money, losing money, making money, losing money. But you can see the moment market left that zone to the upside. Remember, number 1 and 2 are out. Buyers and sellers were taken out during the news, so nobody's there. Now, this one, it was just a sweep of liquidity on this lows here. So number 1 and 2 on the low time frame, they have been taken out. And the market leaves the zone. After it went down and it went up, gave us number 1 and 2, went up, got this support here, and it came back here. You can see how accurate it is. It come back to the fair value price. Then we're getting a trend to the upside. Now, just to reduce this line and explain something more, I want to see this. This was the last trend line that was here. All right, this is the last trend line that was here. It has been here for some time. This is what is called the liquidity. Also, we can consider it as a liquidity. And once the market gets out of this, you see the rotation. First, market spiked out and it went down. When it went down, so you buy on the opposite side of the chart. This is why that you're supposed to look for your buys on these lows, because you want to buy below fair value and you want to keep holding your positions. So the market getting out and it came to support itself here. I want to zoom more so that you can see how accurate it tries to be. Support itself on a fair value price. This line is very sensitive. Every time market comes here, it runs away. You see, tapping here and you get a clean trend. The same thing I've showed you guys, that you have to identify a box, a contraction, or a range, something like that. And when the market lifts, all right, you can buy on lower time frames and go short again, and the market will come back, retest the fair value price line, and it can now decide to settle, go up or down. For example, here, I'm just going to draw the random lines because this one is just an example. But the best thing I want you guys to do is go and back test. Go and back test on your own and come tell me. Now you see where gold is. This gold. Let me just get the watermark so that in the middle of the week, I want you guys to keep watching this. I want you to check this and come back to the comment. Yeah, come back to the comment. Make sure that you bring the report back. You see, the market has left the zone because number 1 and 2 are out, and now we're creating this picture here. Check my previous screenshot video. I happened to post this one, and I told you that we're going to trend. But look at this. Where are we going to go? Let me take you back to the high time frame. Remember, on high time frame, we are below fair value price. We are below the fair value price. We can only look for long position. Don't try to sell. And if I want you guys just to watch and bring back the message to me, we're going to break this fair value price because we are below. We can only tell us everybody is looking to short the market, but the money is flowing to the upside. This is where the money is going, and the liquidity is here. We are going to go up, right? We're going to go up. I don't know. We're going to go up, all right, to around this zone. Come retest the zone, and then we can decide now the market where it will go. After it comes back here, you'll see wonders. You'll see streams like this one. Now, let's go back to 1 hour time frame and wind up this story. So on 1 hour time frame, everybody, the picture and the mind of everyone is here. I want you to look at this. There's a zone here, and I want to use a 4 hours time frame so that to get a clear supply. Everybody's looking forward to short this market. Everybody's looking at this. This coming week, everybody will trying to sell gold, and you're going to see this. Where's the supply? We can look at this green candle. This is a green candle that everybody's trying to use it to go short. And even I'm sure some people have already started looking for sale here because this is the 4 hours supply, and everybody's trying to short the market. And I want you to confirm to me the next one coming week, if this supply is going to hold, we are going to go above the fair value price, and the market's going to keep pushing higher and higher and higher. And this one is there. And I think that's enough for today. And let's catch up on the next video. So sometime we can have our strategies in place. But remember, before you just putting your strategy in place, I want you to be very careful of what you are doing. The market, once it enters this zone, it respects no strategy. For example, this is my setup on this is my time frame, my what? This, you can see, this was the last contraction. Market left the zone from the downside. Everybody want to sell, then it does the opposite, right? It does the opposite. It goes, this means that you buy below the fair value price. Then when the market is above, everybody's trying to do what? To open the buy position, then it sells. Then it came and hung around here. Then it decided to give what? To give us this trend to the downside. Now, this one is done. Where the money is flowing to the downside. The market has entered again a losing phase. Now, for those who are trading GBP/USD, the high time frame, in the low time frame, you can find levels and those confirmations. But remember, we're in the losing phase. Number 1 are out, number 2 are out. Now buyers and sellers are out. And the chances is the market is hanging above the fair value price. So this coming week, this means that we are likely to push to the upside. We are likely to trend to the upside. We are waiting for the weekly candle. And if you can see what is happening here, the market is still hanging around here. So for me, this coming week, I want to look for a bullish part. It will depend on Monday evening how the candle will close, all right? But coming on Tuesday, we'll have a clear picture of where the market wants to go, if it's up or down. But the chances we can see we are hanging above the fair value price, and that from there we can start now putting our strategies there, and they'll start working smoothly. The next one is a USD card. We went short on that 1 hour time frame. We went short on USD card, and you can see it was a good move. But what is the reason? I can go on the high time frame and have a little bit explanation before I just end this live now. not this live, this video. I mean, you see the last, when you look at this, the last contraction was this one. The market went above. Everybody was looking for it to go to buy. But once the market reaches here, the fair value price is here. So instead of you looking for, continue to keep buying, start looking for a sell, because we need to go back to the fair value price. But in the process of going back, we got this contraction, and this one, I think it's on 1 hour time frame. Or which time frame is this? Let me see. Yeah, I think this is a 4 hours time frame, maybe. This is a 4 hours time frame. Yeah, you can see. The market left the zone, went upside. This one's a manipulation move. Everybody's trying to buy. Everybody's trying to buy. Where are they taking the market? They want to go up. But remember, once you start buying, the market will do what? Do the opposite. So this one is a daily, all right, daily contraction. This one is a 4 hours zone. The 4 hours zone, you can see along the way, we find our rotation to align ourselves with the high time frame where the money is flowing to. So this, you can see, we enter this phase, market left the phase, which we call a manipulation. Everybody trying to buy. Then because you're looking at this trend and you are like, oh, we're going bullish, you're going bullish. The market goes up, you start buying, it goes down, all right? You need to do the opposite because the price is now cheap, you need to buy. Now, the price is above the fair value price, is expensive, only look for a short. And again, you see, you can drop on the lower time frame, like the 15 minutes, and you look again for the box and you do the opposite of what is being done there. Look at this. We come back here, and this was just the simplest way to look at the market. But remember, you need to have a working strategy, or else when you use this kind of information, make sure that you know what you're doing. Look at this. This is the last contraction you got here on this lower time frame. And this one, it gives you confirmation the moment. Remember, the high time frame money is flowing on downside. So the market left this zone, all right? I saw this, but I wanted more confirmation. It entered a new phase. You see, when you buy, it drops. I knew that it would come back up. But in the process, it created something new, right? A new contraction. So I wanted to see the market go up. When it went up, I just took this shot. And those guys who are here, live with me on TikTok, we took this one live on TikTok. Live on TikTok, we took this position with you, and you can see how accurate is this. Market went above, manipulated everybody, came down, and it came to settle below the fair value price. And we're supposed to sell because we want to align ourselves with the higher time frame. And in fact, only my target was here, but where's the market going? The biggest target is supposed to be this. Let me show you. The high time frame, fair value price. This is where you're supposed to target here, this line, this daily price, because at the end of the day, we are above the fair value price, and this is where the price is going. So one thing to take away from this, all of that I've said, remember the first setup, immediately you get, that one's the best. You need to hold to your levels. So that's why we are here. And you can see, I saw this, but I left it. I never traded this because today was Friday, and I was like, okay, just want to stay away from it. And you can see the market, again, did the same thing. Went to this phase and create a fake push to the upside, gave us number one, and it went. Now, if you're supposed to look for a sell here, and you see it went down, but what is happening? It went down and it's trying to come back, where it's just coming back here. Now, this means that by Monday, if I wake up in a time, you see, this was my indication that we're gonna go down. If I wake up on Monday and I find that this market is hanging around below this fair value price, I'll take a short position to the high time frame. FVP here. And guys, that is just what I wanted to share with you. Have a good day. Go back test, go try. Don't take my words. This is my own ideas. Go try. Once it's working for you, congratulations to you. And I just want to wish you all the best. And those who are looking forward for gold, I want to tell you guys, bring the report. Yeah, I know that everybody's trying to go short. I want you to bring the report back. Bring the report back, because you see, this one was my idea, the previous idea, and I posted this. We're out of number one and number two. Market retested the zone and it's going long. But everybody here, they're trying to go short. I think I've done it somewhere. Here, let's see, forex.com. And I've said that everybody's going to try to sell gold from today and coming. We come next week. Where is it? Okay, I think it's just here. Everybody's going to try to sell gold. Where? Yeah, here. I said that 24 hours we have a supply somewhere. I've said that 24 hours we have a supply here. Where is it here? Everybody's going to try to sell gold here. But gold's going, it's only going to give a reaction. It's not going to go down. But this is not like I'm saying that I know, but it's my idea according to the way I understand the behavior of this pattern. Gold is going to give a fake reaction and you'll just break through to the highest point until everybody is out. And remember, this one is near just the daily fair value price. So that's why you're seeing this reaction here, but we're going to break through. Otherwise, guys, have a good day. Keep back testing and see you on the next video if I get to prepare one. It's your boy, Mr. FX.